the news piece. Now we'll get into the Q&A, and we'll answer all your questions to the best of our abilities, and then we'll go from there. And then Jerry, before we take off, any last comments from everything we just talked about?
No, it's a great show. One of the, I think
I'm biased.
Here's what. No,
sure.
I don't know if you're necessarily biased. Well, yeah, I guess you are biased.
I'm very biased.
To continue to present information on things that are actually doing stuff. I mean, how many do we need another DeFi? Do we need another DeFi platform? How about, though, a platform that produces communication, internet for people, that isn't owned by some megalithic corporation? You know, how cool is that? So I'm really happy that you continue to bring what you bring. Keep doing what you're doing is what I'm saying.
I'm trying, man. So let's take a look here. So, this is a great one. This is what we alluded to in the beginning. What's your thoughts on Bitcoin for the next month, next 30 days? Bullish September or bearish September? What's your thoughts, Jerry?
I dollar cost average into Bitcoin in it over the next 10 years, and there's nothing going to stop me. I'm bullish on Bitcoin.
Yeah. I made a mistake back in 2022 when I started to do this thing called micro DCAing, and I was still buying. It was roughly half, somewhere around there, of what I usually would put into it, but I was still dynamic DCAing, but I was still below. So when I bought the bottom, which was the bottom at that point, 15,000 whatever, which people always said it's not going to go to 20K. And I bought it, but I could have bought more. And I think that's, even when I said that out loud, it sounds ridiculous. Look, everybody, if you're here right now and you're buying at this point, you're way ahead of most everybody else. I guarantee you're way ahead of most of the institutions out there, especially with what's coming. I don't know if the bull run's going to happen in 2024 or 2025. But moving forward, like Jerry just said, he dollar cost averages. He probably doesn't waver in that because he keeps buying. I'll be doing the same thing. And I'll be dynamic, what's called dynamic DCAing, which, let me show you. I keep saying that.
Dynamic DC. I got to see this.
Oh, you got to see
it. I want to be dynamic.
Don't we all? Okay. So let me pull this up. So it basically goes like this. So there's this website. There's a banner underneath me into the cryptoverse.
Oh, I see what you're saying. Okay.
Yeah. And there are certain times, and every crypto is different. Okay. Bitcoin, if you want to call it a crypto, there are times when it spends the majority of its time in these specific risk bands. And what I do is I say, okay, well, I look at the trajectory and I take a look at the largest point. And what I do is I go, okay, if Bitcoin's at the risk level of 0.3 to 0.4, I'll just put $100 a week. Round number examples, not that smart, need help, right? So I just make round numbers. And then as it starts to go into like a little overheated territory where things start to like heat up a little bit, maybe I'll spend a little bit less. On the other side, when we start going into less risky territory, meaning the price drops, then I'll spend more and then more. And then when I get to over here, I'm pretty much doubling up. And then over here, I just say, well, this is where I want to go. And then maybe I'll sell a little bit. I'll never sell everything. So that's going way to the right because things get overheated. And I always say, like, this is MicroStrategy's plan. MicroStrategy's plan is like, look, I'm buying at 0.1 and I'm buying at 1.0. It doesn't matter to me, okay? And this is your friends. Your friends, like we talked about, at this point, well, actually, we're over here, 0.4, I believe. They're like, no, there's no way. And as it heats up, it's still a hard no. But when it gets like much more overheated, they're like, no, that's a soft no, but it's interesting. And then when it really goes crazy, maybe, then they buy, and they buy like crazy over here. And of course, over here, they're all laughing at you. But it's the person who laughs last, laughs best. And that's what I see coming over here. So also to answer the question about September, I don't know, Jerry, you ever seen this site?
Oh, sure. This is Ben's stuff.
Yeah, I steal all his stuff. It's great. So like, so I like these social metrics. The indicator, I don't know if everybody's seen this. It's pretty fun. It's almost like sentiment, but not really. So you can see like he takes a bunch of different tables, charts. So total market cap, Bitcoin risk, logarithmic regression, and he gives it a number. So right now it's not a great market. I mean, it's very boring. So this is like a safe-ish. I'm not financial advice, right? And then the social metrics, this is like YouTube subscribers, YouTube views. All of us are down because people are just leaving. So right now it's not a bad time. Does that mean we can't go lower? Well, let me show you something. Let me look at, I think it's ROI. I always forget it.
Return on investment.
Yeah. This isn't it though. Oops. There we go. No. There. That's what I'm looking for. Monthly returns. And this is just Bitcoin. And you can look at it like Ethereum. Oh, I like this one better. You can look at all the different cryptos that are out there. There's a ton of them. Damn, he really added a lot of stuff. Those guys are working hard. Anyhow, like Bitcoin, for example. Let's just use Bitcoin, simple. We talked about this on NFA Live on Thursday with me, Ben, and Jessica. So like September traditionally is a really bad month, not just for us, but for traditional markets too. Out of the 14 months, you're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Or out of the 13 months, excuse me. 10 of those months suck. But Jerry, what's the old adage? Sell in May.
Oh, you know what? I don't. That's a hard. Okay, I have erased all those things from my mind.
So, well, here's the term. It says sell in May and go away, but come back in October.
Well, that used to be when because people used to actually go on vacations and they used to like set the market. They would put the market down for a period of time, right?
Yeah, you need a vacation for all the different real estate things that you guys are doing over there in Costa Rica. You need a vacation. You can't make all that money. That's crazy. So hey.
You make hay when you can, and that's what we've all learned, right? One of the things that I find is let's put a bow on the Bitcoin thing. Bitcoin's expansion is generally always predicated on the ability to borrow money.
Yeah.
When when the ability to borrow money is easier today than it was yesterday, this is very, very good for Bitcoin. When credit is harder to get today than it was yesterday, this is very hard for Bitcoin, and it needs some major catalysts like the FASB rule, right? The Fair Accounting Practice Board to change the fair value accounting for Bitcoin. That'll open up balance sheet participation from corporations that want to do it. Then you got the BlackRock ETF.
Yeah.
That's a signal for demand, supply and demand metric to kick heavy into the demand element.
Yeah. This is all true. I think all the narratives coming, but again, we need Jerome's got to calm down a little bit, see how it goes, a little pivot action, maybe stop raising rates, higher for longer, who knows? Well, he's going to do it, let's be honest. Okay. So to answer the question, I think September is going to be awful. When I say awful, I mean boring. May drop 2%, may drop 5%. I don't expect a green candle on September, but October, historically is a pretty good month. Only 4 months out of the 13 are red.
4 years out of
4 years. Yeah, you're right. Yeah, 4 years. So not too bad. And then November looking pretty good. December, and then we'll just start the cycle again. I don't really think too much is going to happen until 2024. The big question is when's the big blow off top? 2024 or 2025 or maybe even 2026? That's the question. Most people are saying 2025, but you never know. Could be early, could be later. Dave says, I love my comment section. Bitcoin can be the greatest thing ever, but for now it's not. And Robert answers, it's the greatest thing. Of course. And then John says, 93% of Bitcoin's already been mined. We are not early. And Dave says, is 93% of Bitcoin being used to transact daily? And that's a good point. It's not. Jerry, what do you think about this? Are we early? Because it seems like we've been here forever.
Yeah, we are really early. We may not be early in the mining algorithms, inflation rate of Bitcoin, but we're very early in the world understanding Bitcoin as actual value, right? About an asset of value, understanding that it is a commodity without an issuer, um, and how it will be used and what it will be used for. Is it going to be a savings instrument? Is it going to be a value transmission instrument? I mean, there's so many question marks, but what we do know is that it is stronger, faster, and sounder than so many of the alternatives.
Yeah, it's true. Yeah. Well, Jerry, this is a good one. This is a good one to bring up. Rob and Jerry, Aristotle, Plato, Aristotle, or Plato. Rob and Jerry, much of your profits are in property as landlords. That's how you can afford to dabble in a number of high-risk projects. Many of us are hand-to-mouth. Sorry. Don't be sorry.
Don't be sorry. This was a great episode for you, Aristotle. This episode. What did Rob talk about? World Mobile Token. How, I don't know because I don't own a node, but Rob, what's the barrier to entry for a node on the World Mobile Network?
Well, now it's quite heavy, but before it was like, I want to say it's like the dollar amount right now.
If Barry wanted to start a node tomorrow, what would my investment need to be?
It'd be like $40,000.
$50,000. Okay.
See, there you go. However,
but 2 years ago, I could have got in on the ground floor for what, $100, $200, $300 for
somewhere between that and 1,000.
Yeah.
So
we're doing the same thing with Hypercycle. 1,024 tokens, one license, and your machine, and what is that? That's a couple. I'm just doing some quick math in my head, based off the market value. That's $700.
Yeah. And then, so think of it this way, like people, I remember, so when I did that video about Link2 and I got into the accredited investor and people were like, hey, I'm not an accredited investor. How the hell can I do this? And I remember back when I got out of the military, the first year, I was like, well, I need a job because I was a medic in the military. I had away from my licensure. So I was like, well, I'll go back to my old job working the UPS at the airport. And this is in the Midwest, -20 with wind chill. And I'm living pretty much, I'm doing okay because I have a job. I was making $10.50. I remember I thought it was like the greatest. I'm like, I can afford like this little crappy apartment. I can get fed. I can, and of course I was younger, so I had a lot of things. But then as time went on, like I would talk to like some of the guys at work, and they were investing into certain things. And I was like, how do you guys do that? Like, oh, just time. I remember there was a guy, Gary, I remember his first name was Gary. I want to say his last name was Donald, but whatever. He was a farmer, and he got into just like getting into stocks. And he was like, yeah, but he worked at UPS as well. And he said, yeah, like I do this and I've been doing this for like 30 years. He goes, now I just come over here because I want something else to do. But for over time, he did pretty well. And I think that's the big thing. People aren't like accredited investors. Like Jerry, I don't know where like your funds went, but I know you went the last cycle, you went heavy into some pretty degenerate plays, I must add. And it wasn't like you were having a ton of cash, but where'd the money come from? Where did all the funds, was it all crypto or was it retirement?
Yes.
Or was it over time, stacking cash?
Well, my story is well documented. 2015, I retired with $23,000, went to Hawaii, learned that my nest egg wasn't there, the house that I had purchased for my mom. In 2016, when she passed, I figured I needed to learn how to do something. I learned how to do some investing. And so at 52, 53 years old, I started with $23,000. And yes, the majority of the gains came from crypto, but I've since diversified into real estate and some other stuff. And I have a much larger traditional portfolio with like Charles Schwab than I did in the past.
Yeah.
But I'll tell you, the thing is, if you understand, your number one investment should always be education.
Right.
I think that's where you've excelled. I've had to become a student. I've had to learn how to have money make money. I was not taught these things, right?
Mm-hmm.
So my journey started in 2016, and I had to learn about assets. What are they? What are commodities? What is the monetary system? What are monetary policies? Once you start learning these things, then all of a sudden you're thinking to yourself, okay, well, like Aristotle says, he's living hand to mouth, or some people are living hand to mouth.
Yeah. Oh, yeah.
Well, I was a guy that lived hand to mouth, but I was making $10,000, $15,000 a month. What does that tell you? That tells you the way I interacted with money was not in the best interest of having money later, right? So I had to learn. I had to learn to make choices. Again, back to, and we're not going to solve this problem on this cast, but the point is, your number one investment should be education. And once you start educating yourself, then the next right move gets easier to make, and then the next right move gets easier to make. And then the next thing you know, guess what? You're not living hand to mouth anymore. The next thing you know, money that you made and invested and did something with is generating a yield that becomes your income. That is, or at least was my goal.
Yeah. That's,
that was my goal.
That was, yeah. And you know what? Like, that's another thing with, like, I remember reading Rich Dad, Poor Dad.
Yeah.
And I'm thinking to myself, oh, at some point I'll be able to do this. This will be great. But I couldn't do it at a certain point because I'm like, you know, I have this crappy job. So, you know, over time you just kind of build up and then just get into it. But the thing is, though, is that, like, how much can you put away? How much can you do? And how much time will it actually take? And here's a prime example. This is a great question to leave in. Alex says, what about Cardano? Is this price attractive for DCA? Let me show you. I'm always using this tool, which you guys can use. It's free. DCA
Don't
strategy.
You just need to change the asset? Oh.
Yeah, exactly. So let's just do, the asset is Cardano.
Cardano.
Let's start when I started and move forward. It was, it wasn't December. It only goes to December 2018. Okay, let's do that. Hold on. Well, I started before this, but whatever. So let's say you want to do now $20 a week. That's reasonable, right?
Yeah, very.
$20 a week. You started on December 14, 2018. You end today. So if we would have, if I lump sum that over the whole time, because Ben's thing shows lump sum, which is great, okay? But it gets tricky. So if I had $20 a week for 6 years or so, I would put in almost 5,000, 4,880. If I were to take 4,880, which again, if you're living hand to mouth, you cannot do. At the peak of Cardano, you would have had a lump of 4,880 would have given you almost $500,000. Okay, let's say that's not going to happen because some people have lump sums. However, if you did $20 a week, and for Cardano, at the very peak, you would have had 113,000, and you would have only invested 2,820,
which would have been a perfect time to take. You would have set some parameter for profit taking before that.
Yeah, but you know, no one's gonna hit. Like, I don't know about you, Jerry. I can't hit that stuff. I'm just not that smart. So,
well, no,
like,
you can set a parameter though, and I know you are that smart because I follow your channel. I've watched what you say.
Yeah, you're very sweet, Jerry. Thank you.
And you've set parameters at I am going to take some profit at this milestone. It may go up. It may go up 300% from that the very next day, but I'm going to take my profit at this parameter. And once you again, back to education should be your number one investment. That is a tool you get from educating yourself around cycles.
True. You know what? I'm going to show. So to really perfectly answer this question is, yes, there's money to be made. Yes, that's in the back. I will say two things. First of all, I'm just going to show you one thing. Hopefully Ben doesn't get too ticked off about this one. So let me.
Oh, you're not paying rent for that?
I'm not paying rent. I put some funds in. Let's see. So let's see. Okay. Listen, I'm going to show you something and people will complain because like, hey, I pay for that. Trust me, there is so much stuff in here. You'll never be able to go through all of it. It's just impossible. This is crypto. This is all the stuff in macro. Oh my, it's so much stuff. to really make smart decisions. And again, the link that's in the link in the description, you get 10% off the first month. But the stuff I just showed you with the DCA tool, if you go to the website, you can sign up for free and use that tool. That's what I use that tool all the time. Some other stuff. So let's see, crypto wristbands. So this was the one we just showed you, right? The Bitcoin one. So let's take a look at Cardano. ADA is currently in the 0.1 to 0.2. It's right here. So as far as like risk levels, it's not a bad time. If it goes down to here, it's a really good time, which is what I think Ben is actually thinking is going to happen. I don't know if it's going to happen, but to answer your question, yeah. To see everything else like Ethereum, BNB, Sol, Link, I think he's adding some more later, hit the website. That's the first thing. The second thing I'll just say is this. This was a comment from somebody, a subscriber. They said, it seems like as time goes on, you'll have relics of the past, of the old whatever projects that are out there. And then VCs get involved and bag holders get involved, and it's harder to actually make it up in the next cycle. So that's why you'll see something like Solana come out of nowhere, because there's no bag holders. There are VCs, but I'm working on a project right now, and I can tell you right now, those VCs and everybody that's investing, they got a lockup period between 12 and 24 months. So even though like Solana did really well, yes, it had VCs, but there's a point when everything becomes unlocked, and then of course things get dumped. Moving into the next cycle, take a look at those projects that are really gaining ground right now that don't have a boatload of bag holders. That's why we talked about Optimism. That's why we talked about Arbitrum. And that's why we also talked about Hypercycle. They don't have anything. I mean, they don't have a bunch of bag holders right now. So moving into it, just take a look at those. It's risky, like Aristotle or Plato talked about, hand to mouth. But some of those risky plays do play off. Not financial advice, just telling you this is what I see. And this is why I'm actually investing into Arbitrum. Heavily. Not heavily. I mean, reasonably. We'll say that. Okay. Jerry, what do you think?
I agree.
Great. Sounds good. But see, you're more of a degen than I am, because you got into some crazy like farming plays.
I don't.
And you did really well.
Yield generation. So again,
Right.
back to what are my goals? My goal is not to die wealthy. It's not my goal.
What's your goal?
Is to have a really nice quality of life now.
That's a good one.
And so when my assets can generate a yield, I'm able to use that yield in many different ways, right? Sometimes I buy other assets. Sometimes I buy a nice shirt.
Whatever it is.
Yeah, you know what I mean? I mean, you had me on your show when I was literally on a budget of $350 a month with $1 million portfolio.
That was, well, because you were really going heavy in some things, I believe.
I was stocking assets instead of drinking lattes. And again, it's back to that whole education thing, right? If I was not earning a living, so it's not like I had income coming in that I could budget and direct. I had to make calls, right? If I drink this latte today, that's 5 Cardano I don't get to put in my wallet.
Yeah.
So bye-bye latte, hello water.
Which I got to tell you, like right now, the problem with like you watching this video, you're not the problem investor. The problem investor are the people who are going to talk to you and call you up and text you when everything blows up. Those are the ones that are like, you know what I should do? I should start, stop buying these lattes and get into Bitcoin. When Bitcoin, like when the risk levels are at like 1.0, 0.9 and 1.0. And then it's just kind of like too late. And honestly, like right now, to me personally, like this is the time. This is the time.
This whole year has been the time. What a blessing this year has been from an acquisition standpoint. The acquisition standpoint. We are going to see another upswing because we always do. Business cycles ebb and flow, and they have since the beginning of free markets.
Let's see. Yeah, but let's see if I think there's another downtrend coming, because I am a bear most times. So we'll see.
Well, what do you think predicates it? I'd like to. What do you think is at the foundation of an upturn or a downturn?
The talk of a recession and the Bitcoin ETF possibly being either delayed or outright rejected. And when we start to hear about the news about the recession and the money printer doesn't go back on, we don't have excess liquidity in the markets, then what do people do? They become risk off. And we're a risk on asset. I think that's the problem moving into it. But you got to understand one last thing about recessions. You know what the recessions are great for? They're great for killing that inflation. And if the Fed couldn't do it with the quantitative tightening and the raising of rates, recession will do it for them. And we'll be below 2% and we can just move forward. It's always like it crunches you and then it expands later on. Like after the Great Recession, 2008, 2009, we had over a decade of economic prosperity that we've never seen before. Same thing moving forward, I think.
I agree 100%. It's all going to be based on the ability of credit.
Correct.
Easier
like you said,
or harder.
And it's the rates are pretty high right now. How about this? This was off to our last topic we talked about. Page 24. Thank you, DS Flat. Page 24 of the BlackRock ETF application states they can choose whichever fork of Bitcoin they decide is Bitcoin. They also state Craig Wright is danger. Is a danger on page 48. Still not worried. So everybody thinks that they're gonna stake it and do something crazy. Well, who knows? But that's another thing.
It's good to to be aware of these things.
Yeah.
You don't want to get caught off guard, but you have to also do your own game theory in your head. What is for instance, what would be in BlackRock's best interest? It's super simple. Go with the herd. The herd is where the money is, not the side chain, not the newfangled thing you got control of.
Yeah, I got to agree. I mean, I think that if you want absolute power, see that's a tricky play, right? If you want absolute power, absolute, then you can do it. You can fork it, and then you create your own and have your own miners. But is it really worth it? If you've got a market it's less than $1 trillion, and it could potentially take over the globe, and you own a majority of it, or not a majority, but a large portion, and you put that in, you actually buy that, hold that in your spot ETF. I think there's more of an upside. The other parts, I guess it's risk versus reward ratio. And I'm not BlackRock, so who knows? How about this one? Hey, Rob, thanks for the Tangent video. You are welcome. Tangent, Jerry, I don't know if you know it. It's
I know exactly. I interviewed the CEO. Wonderful guy.
Okay, great. Yeah, I just did a quick video on that one. He says, but your guest just mentioned a project I'm interested in that I've not heard anyone else talking about. I haven't heard about this till Jerry told me. Hypercycle. This is something you've looked into a little bit, but it's confusing me. Jerry sent me a video of it, and I sent him a video back of that guy who makes like the most ridiculous assertions as to explain something. I'm like, I don't get it. So I'm glad Jerry was on. I kind of get a little more. I have to look more into it. So no, to answer your question, I haven't looked heavily into it, but it's interesting, and there's a lot of smart people looking into it. However, don't be that determining factor. There's a lot of smart people that looked into FTX and they got burned too. Not that Hypercycle's FTX. I'm just saying that smart people get it wrong.
No, and again, everything. What does your banner say?
Everything's a scam until proven otherwise.
Everything's a scam until proven otherwise. Exactly. Exactly.
Preach it, Jerry. Preach it, as they say. Hit the like button. Thank you. Education is key. Future millionaire. Robert Yosevides, you convinced me to buy the Tangent wallet. I used your link. Thanks, man. See, someone did a smart thing. They bought the 3-pack instead of I accidentally bought the 2-pack. Stupid. It's like $10 more to get one more card. And it's inexpensive. It's like $45 for 2, $55 for 3. And I think I gave everybody 10% off. Not bad. Love to meet and have drinks.
Uh-huh.
I like drinks. DJ Tolman. Does the Arbitrum token have a purpose? Do any of them have a purpose? Do they all? Does any of them do something that you absolutely need right now, except for Ethereum? Ethereum, I need that stuff for gas fees, and it ticks me off because it's so expensive. So, although
Hypercycle's token is absolutely 100% needed to fulfill the payment requirement of the smart contract for the AI to produce the work.
Yeah. See, like an Arbitrum is an L2, so I believe that there is a definite use case, because guess what? You don't have L2s, you got to pay some super expensive for like gaming or other transactions. It doesn't work out too well. And also, I've been playing this game lately. I know you haven't seen this, Gary. I have a thesis that games are going to blow up. There's one called Pirate Nation. It's built on Arbitrum. And when I do transactions, it's super cheap. It's like pennies. That's like, I think it's like fractions of pennies. So when you're like buying things and getting NFTs and stuff like that, you put them on chain. There it is. It's very nice.
Here's the thing: you develop a game, build a game, produce a game, and get it out there that anybody can play on this, and all they need is a Wi-Fi connection.
Oh, I got one coming.
I know you do, Flappy Birds, and it's that whole concept of when somebody builds something that a billion people use. Hello, I mean, it is huge for the folks that were in on it.
It will be. So everybody here, so everybody knows that we're bringing back Flappy Bird. It's going to be in Web 2, Web 3, and that's all I really can say, honestly. But you guys will be the first to know, and I'll be doing airdrops, and I'll be doing giveaways. So watch out. J2 Day says there's way too many macro negatives. That's true. That is very true. Excellent interview. I don't want BlackRock to have any Bitcoin, as they will mean they will become a price manipulator. Sure. Well, hopefully they manipulate it up, and we can all, if you even want to, there was a video I watched. I think it was from Bitcoin University. It's a good channel, very Bitcoin centric, obviously. And they said the downfalls of taking profits. And it was a good video, and it was a good point. We always talk about taking profits. And they said, well, what if you took profits and you lived in Venezuela, or you lived in Turkey for the lira? And of course, everything just collapses. In these situations, this is a bad idea. And they talked about, what if you live in sub-Saharan Africa and you took profits and bought a home, and then the government repossesses your home? Now you took profits. What a bad idea. And it was a good point to really think about that. In certain situations, taking profits is a pretty bad idea for Bitcoin moving forward. However, Jerry, I don't know what you think about this, but like to be able to use your Bitcoin to pay, like, let's say you have massive bills and they're like, the interest rate is like 20%, or you want to own your home. I don't see a problem with putting into assets that you could actually, depending on the place that you live. But that's how I see it.
Well, that's an exchange. You're making the value exchange, right? Like, I want a place to live, so I'm converting the value of this asset into this asset, the asset of maybe Bitcoin into my home. I can't live in Bitcoin. I can't, it doesn't keep me dry in the rainy season. You know what I mean?
Yeah.
But the roof over my home does.
That's true. But you know what? That's what the white paper said, right? It's a peer-to-peer transaction. That's what it's supposed to do. So, like, I mean, if my mortgage company took Bitcoin, I'd pay them Bitcoin. I'd say, you might want to hold on to that slick, but they wouldn't. So, but if they just take dollars, well, I'll just transfer to dollars.
You know what's interesting, and I'm waiting for you to do an episode on this, and that is, when do you get to the point, right? When do you get to the point where you don't take profits, where you no longer ever get rid of your assets, you just borrow against them? Like, for instance, this Bitcoin ETF with Blackrock, right? Let's say I have my Blackrock account. I do have a Fidelity account. And let's say this happened. So Fidelity has a Bitcoin ETF, and I have $1 million worth of its ETF stock in my portfolio. Yeah. And I need some money now. I've run out of money. So I need some money. And it's a perfect time to take profit, but maybe this is a growth thing. Maybe Bitcoin is going to continue to grow for the next 100 years, and taking any profit would be stupid. Maybe I should borrow 10% against my ETF holdings. That way I'm never letting go of my asset. You know what I mean? Once you start learning, there's no one size fits all process for anybody, for anything. But once you start educating yourself, it's like, okay, there'll be times where taking profit in cycles, when you know for a fact the world isn't ready. Like, the world was not ready in 2021 for Bitcoin. Us that were in it loved it going to 65 and selling at 65 and buying back in at 20 was a great strategy. How many more of those cycles do you think we have? 1, 2? Well, at what point do you say we've reached escape velocity and there is no more going below this floor? Where's the floor?
Where's
I don't know. Those are the mechanisms. So you have to you can't discard one strategy versus the other. You have to be open to whatever's in the middle, right? Maybe some compromise. And that's what I love about how you were always talking about we're in a market that's too early to leverage. So it would not be a good idea to borrow against your Bitcoin.
Yeah, I found that out.
But however, I will tell you, it's a great opportunity to borrow against your $1 million of MicroStrategy.
Oh, right.
You know what I mean? So it's not like leverage is bad and this is good or not. I mean, everything is just like keep educating ourselves and learning the nuances, because what the nuances for Rob may not be the best ones for Jerry. It doesn't mean either one is good or bad. And your channel brings a lot of these kind of things. So I'm glad that you keep doing this.
Thanks, Jerry. So, and then JD's got a good point. Do as the rich do, leverage the asset and loan and keep both. There's a term in America, I don't know if it's globally, but it's buy, borrow, die. You buy, borrow, die. So you buy your assets, you borrow against them, and then you kick the bucket and die. And the next generation of your kids, they get that. They can write off the loans if they have to. Everything's in a trust. And of course, you know, taxes are minimal because everything's in a trust and it's owned by the corporation and blah, blah, blah. So yeah, but again, I've done loans, did it on Celsius, as a matter of fact. Not a great idea. And of course, when you get those margin calls, you know, because that's very volatile. I think right now it's not a great idea to borrow against Bitcoin, but yeah, MicroStrategy, sure. And then here's a question. This is a great question. Ryan Vegentech nailed it. Why would I need this decentralized consensus of a blockchain to play Flappy Bird? That's the great thing. You don't. Yeah, you don't.
Not necessarily.
So here's an example. Let's not use Flappy Bird because that wouldn't. Not a great idea. But let's just say, for example, we use another bird-based game, Angry Birds. Let's say, for instance, Angry Birds wants to come back on Web3. Why would they do that? That makes no sense. Well, first of all, what they could do, perhaps, maybe, is the Web2 version could have it where because in Angry Birds, you don't really earn anything, right? What if you could earn like a nice NFT or something like that, which will just stay on the web too. And then maybe you could take that NFT and maybe put on someplace else, or you could have it and you own it in your wallet. And you could take that and cross it over and start to sell that on, say, like OpenSea. That'd be one thing. Or maybe you could say, like in the game itself, Angry Birds, not Flappy Birds, that you play so much that you have NFT and it has all these upgrades, and you can loan it out to somebody else who wants to get farther in the game, and you can rent it out. That's one thing. But what about the token? Let's just say, for instance, in Angry Birds, that you take this token, Angry Token, and you're able to buy up these tokens, which will be like some of the in-game currencies. And you take those tokens for in-game currencies, and let's say that you want to say, you know what, I like this, I'm going to keep this on me, and I can stake it, accrue more tokens. And then also, let's just say, for instance, that, I don't know, maybe the creators of Angry Birds say, you know what we'd like to do is we'd like to give some form of royalties back to you for all the money that we make on the Web2 version. And the amount of token that you're able to actually take, you get a royalty, a percentage of the cut for Web2. Where does Web2 Angry Birds make money? It makes money in two ways. It makes money on advertisements, just like how Facebook does it. And the second one is IAPs, which is in-app purchases, which, crazy enough, a lot of people, or some people, buy like hundreds of dollars of these things in these little goofy games. Trust me, I know. My wife plays Pogo.com for some reason. And then, of course, maybe down the road, Angry Birds gets a book deal or a publishing deal or something like that, and you get revenue, or not revenue, excuse me, royalties from that. This is just one thing that you could think of. And before anybody says, well, that's ridiculous, why would you have like some kind of in-game currency? Look at two popular games, Roblox, and Fortnite. when you go into Fortnite, you get Z-Bucks or V-Bucks or whatever else it is. You actually have to pay for that, for those types of dollars, those types of in-game currency. And it's not just one for one. It's like you get a mass amount. And then Roblox has, I think it's Roblox or something like that. Again, why don't they just have the dollars? Well, they don't. However, using that, could you stake it and give royalties and all those things? Well, no, you really couldn't. And then all the things that you buy in-app purchases, can you take those off and then rent them out or sell them someplace else? No, you cannot. So these are just things that I think about in a hypothetical game, Angry Birds. That was a very long explanation. Sorry, Jerry. What did you
No,
catch?
I caught it all. Here's the thing. Regardless, so the question was, why would you want a decentralized network, right?
Yeah.
Anytime that you have value, you need security, right? Anytime there's going to be money on a network, you need it to be secure, or the people on the network will not trust it and will not use it, right? Well, when you're talking about Angry Birds, you're talking about a very proprietary element where the value on the network is being secured by the corporation that runs Angry Bird, the game. And they are 100% responsible. They could go down tomorrow, right? But when you're talking about ownership, like a bearer bond, like a bearer instrument, that if I have this thing, I own it.
Yeah.
Which is what you're talking about with NFTs and in-game currencies and these type of things that can be transferable. They're bearer instruments. You need to be secure, and that is why you would want to stake, and that is why you would get rewarded for helping secure the network, so that bad actors are not in there doing malicious little ecky things.
Yeah, like they did to the DEA, like the little story we covered.
Exactly.
Hey, so here's another example. Let's just say in Angry Birds, you have some kind of like a horse racing style game, and you want to wager against other people who are playing on the same network. Maybe the tokens that you have, maybe you could put those up as a wager, and you could say, I think I can beat everybody. And then you go, and the certain way that you tap or the different strategy that you have will determine if you place first, second, or third, and you could use that as some type of version of wagering. So there's also that. And yeah, there's a lot of options.
And you said I got into some degen stuff.
That's not true. Hey, there's a pretty interesting game out. My friend Steven, who owns the San Juan Smokehouse, he gets it was a token called Crown, and it's like it's not AI, but it's horse racing, which you can use the token. Now, I'm not telling everybody to gamble. On YouTube, you cannot promote gambling, but I'm just saying that this is some type of buying horse something or other. But I thought it was interesting, and like the token went crazy. And I think some people like to gamble. I don't know why you would want to gamble. I'm just kidding. We're all in crypto. We're all gambling. Are you kidding?
Yeah, I guess. Yeah, I guess that is. I think investing is, I guess, a form of speculation, and speculation can be considered gambling. I don't like to frame it like that. It's such a negative context. The only gambling I do is my fantasy football team and my fantasy baseball team.
That's reasonable. That's reasonable. All right, guys. So look, we've been almost going an hour and a half. Jerry's got stuff to do. He's got to go work out. He's got to go eat healthy, all that good stuff. So, Jerry, thanks for stopping by, man. I appreciate it.
Great stream. Thanks, Rob. Look forward to talking more about Flappy Bird and Hypercycle in the future.
Yeah, exactly. Everybody, if you like today's video, thumbs up. Consider subscribing. Everything we talk about is time sensitive. That's it for today. Thanks so much for stopping by. We do appreciate it, and we'll see you on the next one. Adios.